Look, you have been told your whole life that being responsible means saving money. You put your head down, you work the overtime, and you dutifully transfer a portion of your paycheck into that savings account every single month. I mean, you look at that number and you feel safe. You feel like you have built a fortress around yourself. You think that money is sitting in a vault waiting for you, protecting you. But deep down, you have noticed something disturbing. That $10,000 felt like a fortune 5 years ago. Today, it barely covers a used car. You were doing everything right, yet you feel poorer every single year. Most people think a savings account is a piggy bank, a place to store value. Honestly, that is the comforting lie. The brutal reality is that your savings account is not a vault. It is an incinerator, and while you sleep, the slow fire of inflation is burning your life's work into ash right in front of your eyes. I am Heisenbank, and on this channel, we break down the financial systems designed to keep you broke. In this video, I'm going to show you the mathematical proof that saving cash is, frankly, the riskiest investment you can possibly make. We are going to calculate exactly how much of your labor is being stolen from you every year and explain the psychological flaw in your brain that makes you thank the banks for doing it. This is the difference between building wealth and financing your own poverty. So, let us start with the trap that 99% of the population falls into. It is called the nominal illusion. Humans are not wired to understand value. We are wired to understand numbers. If you have $10,000 in your account today and you have $10,000 in your account next year, your brain tells you that you have not lost anything. The number is the same. But look, you do not eat numbers. You do not live in numbers. You live in a world of goods and services. When the bank pays you 0.01% interest, they are handing you pennies. But while you are collecting those pennies, the cost of bread, gas, rent, and healthcare is rising by 3, 4, or 5%. This gap between the interest you earn and the rate of inflation is called the real negative yield. If inflation is 4% and your bank pays you 1%, your math says you made a 1% profit, but your reality is that you lost 3% of your purchasing power. You were basically not saving money, you were slowly bleeding to death, and because the number on the screen did not go down, you do not even think to call a doctor. Now, let us look at the brutal math, because feelings can lie, but numbers never do. Imagine you have $50,000 in a high-yield savings account. Let us be generous and say you are getting a 4% return. You feel like a genius. You are making $2,000 a year just for sitting there. But let us say real inflation, not the government number, but the actual cost of living increase, is 7%. Here is what happens over 10 years. Year 1, you have $52,000 on paper. But to buy the same amount of stuff you could buy last year, you would need $53,500. You are already in the hole. Fast forward 10 years. If that spread continues, your $50,000 will still exist on paper. It might even have grown to $75,000 nominally. You will look at your balance and think you are rich. But in terms of purchasing power, that $75,000 will only buy what $35,000 buys today. I mean, you did not spend a dime. You didn't go on vacation. You didn't buy a luxury car. You saved. And yet, $15,000 of real value, representing months or years of your hard labor, simply evaporated. Look, if a thief broke into your house and stole $15,000, you would be furious. You would call the police. But when inflation does it, you just shrug and say, well, everything is getting expensive. So why do we actually do this? Why do we voluntarily sign up for a guaranteed loss? It comes down to a psychological glitch called loss aversion. Daniel Kahneman, a Nobel Prize-winning psychologist, proved that the pain of losing money is twice as intense as the pleasure of gaining money. We are terrified of seeing that account balance drop. If you put money in the stock market or real estate or Bitcoin, there is a chance the number goes down tomorrow. That possibility triggers your fight or flight response. So we choose the savings account. The number never goes down. It feels safe. It soothes our anxiety. But this is a false safety. You are trading the risk of short-term volatility for the guarantee of long-term destruction. The stock market might go down, the real estate market might crash, but cash? Cash is guaranteed to lose value. There has never been a fiat currency in the history of the world that has gained value over a long period of time. You are choosing a slow, comfortable death over a bumpy road to freedom. If you are realizing right now that your safety net is actually a trap, then you are already ahead of 90% of the population. Most people will watch this, get scared, and do nothing. They will let the banks continue to profit off their ignorance. If you want to stop being the victim in a financial game you do not understand, make sure to subscribe. We do not sell comfort here. We sell the truth. Now, let us talk about the entity that loves your savings account more than you do, the bank. Have you ever wondered how a bank pays for those skyscrapers, for those Super Bowl commercials, for those million-dollar bonuses? They do it by exploiting you. When you deposit $10,000, you think it sits in a vault. It does not. The bank takes your money and immediately lends it out to someone else. They pay you 0.5% interest. Then, they lend your own money to your neighbor for a car loan at 7% or a credit card at 25%. They are making a spread of 6, 10, or 20% on your money. And who takes the risk? You do. If the bank fails, you have to hope the government bails you out. If the dollar collapses, you are the one holding the bag. The bank is using you as a cheap source of capital to acquire real assets for themselves. You are not the customer, you are the product. You are the raw material they mine to build their empire. Actually, the biggest cost of a savings account isn't just the inflation loss, it is the opportunity cost. Let us look at two people, person A and person B. Both save $500 a month for 30 years. Person A is responsible. They put it in a high-yield savings account averaging 2%. After 30 years, they have $240,000. It sounds like a lot until you realize that in 30 years, that will buy you a used Honda Civic. Person B understands the game. They put that same $500 into a boring, low-cost index fund tracking the S&P 500, averaging 8%. After 30 years, person B has almost $700,000. The difference between person A and person B is nearly $500,000. That is not just money. That is a decade of retirement. That is your children's college tuition. That is the freedom to quit a job you hate. By choosing the safety of a savings account, person A essentially burned $500,000. They paid a $500,000 fear tax just to avoid seeing the red arrow on a stock chart. So, what do? Do you keep $0 in the bank? No. You need an emergency fund. You need liquidity for short-term bills, 3 to 6 months of expenses. That is it. But anything beyond that must be converted from currency to assets. Currency is a medium of exchange. It is meant to move. It's like hot potato. If you hold it too long, you get burned. Assets are things that have value. Businesses, real estate, commodities, things that cannot be printed by a central bank at the push of a button. When you own assets, inflation works for you. When the price of milk goes up, the price of the companies selling the milk goes up. When the price of lumber goes up, the value of your real estate goes up. You stop being the victim of the system, and you start being the owner of the system. Look, the financial industry relies on your fear. They rely on you being too scared to invest and too busy to do the math. They want you to be a passive saver. They want you to park your labor in their accounts so they can monetize it. It is time to wake up. The safety you feel in your savings account is a hallucination. Every day you leave excess capital sitting in cash, you are voting for your own poverty. You are working for money instead of making money work for you. Stop saving, start investing. Stop holding currency, start owning value. The system is designed to strip mine the wealth of the fearful. Be brave enough to opt out. I am Heisenbank. Class dismissed.